stocks, bonds, ETFs, straight out of downtown Chicago. This is Zacks Market Edge.
Welcome to Zacks Market Edge, the podcast about investing and your life. I'm your host, Tracy Reinick, and this week I'm joined by Zacks' very own microcap analyst, senior microcap analyst here at Zacks, Mark Zinski, who's joining us for the first time on the podcast to talk about what's going on with the small cap stocks. And specifically, we're going to look at a couple of the hot industries, like obviously AI, that's maybe the hottest industry out there, but also maybe some medical devices, just some other tech names, a couple other small caps that we rounded up we might talk about. But we do want to focus on how you can buy AI in the small caps, or can you even buy it? We don't know. I had to investigate to prepare for this podcast, but Mark assures me that yes, you might be able to buy some AI names in the small cap space. So welcome to the podcast, Mark.
Oh, thanks for having me, counselor. I think as we were discussing before we went live, I think a lot of investors out there are asking themselves, am I late to the party, with AI? And I think part of the beauty of the small cap space is you find players that are known in the industry as picks and shovels plays. They may not necessarily be inventing or augmenting the AI per se, but they have services, equipment, or processes that tend or should benefit from the AI boom. And so, in other words, they're sort of like these little barnacles on like the Mag 7, for instance. And we certainly know that the Mag 7 is spending a lot of money on AI, and it's a veritable arms race for sure. And we don't know for sure, how it's going to play out. Obviously, there's some people thinking that it's way overhyped. But as I distill all the commentary and evidence out there, I ultimately come to the conclusion that, based on the CapEx budgets that the big tech players are talking about over the next 12 months, that I feel pretty good about the next 12 months. Now, we can argue, beyond that, whether or not, the return on these investments is going to be questionable and so forth. But in terms of just the next 12 months, I'm feeling pretty good about it.
Okay, that makes some sense. There is some visibility there if you are on the services side of AI, because we know all these data centers are being built out and someone is making the racks to put the chips in, and then they have to cool it. So we know at least for the next couple of quarters, kind of what the demand is for that. So that makes sense for even these smaller companies. But how are these small companies able to even get a foot in there against even some of the bigger services companies? Is it going to be some kind of specialization or location maybe, or the bigger players wanting to spread the wealth away from just having a couple of services, and that they will be willing to take on a couple small guys? Like, how will all the business be divvied up, and how will a small company get any of it?
Well, the two names, I guess, that we were thinking of talking about today, the first one, that INO Data, which provides the annotation and the data cleansing of the AI models for the large tech players. And so they have several contracts with the big tech players. They have staff positioned all over the globe that can help with the testing process for the AI models. So they do have the infrastructure, I would argue that most of that infrastructure just relies on, I think, qualified people. Given the fact that they have a pretty robust infrastructure of qualified people working globally to help test the AI models, I think that's one of the main reasons why they're winning business with the big tech players.
Okay, let's stay on INO Data since you brought it up. The ticker there is INOD, and they have a 1.2 billion market cap right now. But it's been pretty volatile, this stock. There, obviously, any of the AI names, it's been true. I'm bringing up just what our quote page looks like. It is a Zacks #1 rank right now. It's got the F for value, an A for growth on the style scores, and an A for momentum. No one should be surprised at any of those, bad scores on the value for the AI stocks. So that would be par for the course. But just scrolling down a bit, we have this nice price and consensus and surprise chart. It looks like it just got some coverage on Zacks, at least, because we only have one little green arrow there on the whole chart going back all the way 5 years back. And so that would mean, not surprising with some small caps that we don't have a lot of coverage. And then I scrolled down further. This is on the new Zacks quote page, by the way. For those of you watching on the video, you can see a lot more information now. But if you scroll down, it does give the agreement, and we just have one analyst on the company. Now, what is your take on, how difficult it is to invest in a company that only has the one analyst? How hard is it to be the sole analyst on a company like this that's in a red hot area? How does that play into what investors should be looking at with these small caps?
Well, again, just to revisit the Zacks model, right, has been is based on the pretty compelling academic evidence about changes in estimates, right? And so this part of the universe, these micro caps, it was a micro cap back in last April when we were the first to put a rating on it. We put an outperform rating on it back last April, and I think the stock was around $6. So when you don't have analyst coverage, you're really relying upon a combination of quantitative and qualitative screens. And this name was ranking very high on those two respective screens that we utilize, and then further due diligence, made us more comfortable with it. So, I personally, in my investing career, have had very good luck with these so-called picks and shovels plays, where you're finding smaller companies that are participating in a major seismic secular trend, and then, of course, you look at the balance sheet. The balance sheet was fine and so forth. And scalability isn't so much a problem because, like I said, it's relatively asset light, where you're reliant really on people and the quality of your skilled labor force. So I guess that could be a constraint down the road, either a problem with the availability of skilled labor or perhaps some wage inflation.
Yeah, I just brought up the price and consensus chart to kind of show what has been going on. The one analyst on it has been raising, and as every quarter that comes out now, there's going to be better data on this chart. Right now, it's a little bit squished to the right there, but it is showing that the analyst is getting a little more bullish here on 2024. Even 2025 is up and to the right. What do you make of, just the speculation that happens in some of these stocks? As you can even see on this price of consensus chart, if you look away from the actual earnings part of it, the chart, it has spiked quite dramatically here off of this last earnings report. And so you're going to get a lot of volatility with all the small cap stocks, but certainly these ones in AI. What do you make of that? Like as an investor, there's a lot of rumors that go on. There's, people shorting. There's special reports that get put out on these more prominent names. What do you think investors should be doing with all of that kind of information?
Well, I think first and foremost, right, you got to think in terms of cash burn, and what's the balance sheet like? Is there? I think a lot of investors get blindsided by equity raises down the road that are dilutive. So you want to make sure, obviously, you've got a good cash runway. When you're talking about, I think it's fair to say this could be kind of I don't know if once in a lifetime it might be too much hyperbole, but this certainly is a big deal, AI. And so to think about what kind of multiple or how to value this, when you're looking, in this case, you're looking at a sales multiple. I believe it's still, when things start getting 5-6 times sales, right? You start asking yourself, is this getting kind of rich? I mean, this still is not, in my opinion, frothy rich like some of the other AI plays. Based on
just looking up that price to sales ratio while you're talking about it, and Zacks has it at 8.75 right now,
and I think
it's not over 10.
Not over 10, and I think this last quarter, what was the top line growth? I mean, was it close to 70% plus ish?
I think so.
Something like that. So I mean, this isn't like 20-25% growth, which obviously you'll take any day. So this is pretty outsized growth. So in that context, I don't think it is terribly unreasonable. And when you put it in the context of the Mag 7, right, their business model is typically a kind of a land and expand. So they start a relationship with a big tech player, see how it goes. And obviously, if the tech player likes their work, there's the potential to really upsize future orders. And I think that's what you're seeing here. They're still, while they do have deals with several of them, there's still the potential to gain more, and there's still potential to expand upon the existing relationships. So that's I think how you should be thinking about it, about that growth. It looks to me, based on that calculus, looks to be pretty sustainable over the next 12 months, in my opinion.
Yeah. That's a good point. So I always like to look at the growth, even though I'm the value investor, to kind of see what's going to be happening. And I don't like to see the ones where it's like some huge drop off. But I've found, looking at some of these small caps that only have like one analyst on them, that they're waiting too. They're waiting to kind of see what develops for next year. So this one is showing sales growth of only 22% next year. But we'll see how that changes as we get into next year.
Correct, and that's coming. I mean, agreeably, the comps are going to be much tougher when you're growing 70% plus. So,
right. It's kind of crazy because a year ago their sales were 86 million. They're expected to do 164 million this year, and then next year at 201 million. But that's still, pretty significant growth in only 2-year time.
Yeah, and also consider, what if they're able to successfully expand beyond the Mag 7, right? I mean, that could be a long runway too. So if they begin executing on diversifying that customer base, that's additional upside.
Okay, let's talk about the other AI play. And this is even a smaller company, and it's TSS. Is that even Can you pronounce it any other way? I don't know.
Right. I think,
But
it's Total Site Solutions is
okay.
it's
So
the
it does
original
stand
name.
for
I don't
something.
know if they go by that.
Okay.
Yeah. Um,
So they pulled an IBM on that one, on the name. That's good, because I was like, this is a little weird. TSS. I'm not sure what that's about, but the ticker is T as in Tom, S as in Sam, S as in Sam, I, TSSI. And this one is more on the services side with the data centers, right?
Correct. And again, this is similar to INO Data, very very high customer concentration. In fact, almost 100% of their business is coming from Dell at this point. Now, yes, customer concentration is a risk, but my experience in the past has been, if you are in the middle of this kind of secular seismic shift that's going on with, in this case, with AI, I'm okay with customer concentration in the beginning. I think it becomes more of a risk down the road if you can't obviously prove your business model out to attract other customers. And they recently expanded their capacity. They got a new facility, and they seem very, very bullish about the kinds of volumes they can do, and that the kinds of volumes that might come from Dell. And again, this is based on the AI boom and the server craze. This new facility that they've built had to be built not only to accommodate the new volume, but also to deal with the intense energy requirements that these new servers demand, and their old facility just simply couldn't handle it. So I'm always encouraged by companies that are spending a fair amount of money on CapEx for expansion. I think that that suggests that the company to have an outlay like that, to me, always suggests there's a lot of confidence about what sales can look like several years down the road, and how confident they are in that relationship with that customer.
Yeah, and it's a pretty big outlay. So I was taking a look at what they did in the third quarter, and then their announcement about that new facility. And third quarter revenue, $70.1 million. But I thought they said this new facility, is going to be 25 to 30 million just in improvements to the building. I guess it's right next door or something.
I think it's, I believe,
Yeah. And that they did say, as you mentioned, that their current facility couldn't handle the power needs that this one had. And then I thought there was an interesting little kind of quote in there. They said that the racks consume 3 to 5 times the power as those being produced today. These will be the new racks for the even more advanced AI chips. But that's kind of incredible. 3 to 5 times the power of those today. So this company is trying to plan for the future and for the next couple of years, and they have to go into this new facility. They have to spend the money, and that's all you wrote. If you're gonna be in this business, then you have to do what it takes to keep up.
Yeah, and just to be clear, there's no. They believe they can finance that capex with existing cash on hand, as well as some bank debt. So there won't be a need for any kind of equity raise. And another interesting sidebar is there's the potential, and they talked about this on their call. Right, we all know what's kind of going on with Supermicro. There's a chance, that they might get some of that business if Supermicro continues to struggle. So that would be upside. It's just something, I'm certainly not banking on that, but it's just something to be aware of.
Right. Yeah. That brings me to another question about execution with both of these. you were saying INO Data has the people, globally stationed where they need to be stationed. This one is moving into a new facility, so that's part of its execution plan. But we've already seen Supermicro kind of failing on the execution part, and they're much bigger. What are the risks on the execution side in AI right now? They have to be kind of big.
Yeah, I mean, I think a good proxy, and that gives me some degree of comfort, is looking at Dell, right? So essentially, these guys are a barnacle on Dell. In Dell's last quarter, I mean, their servers, their overall business, the overall revenue, I think, was a little flat, but that server business was like 30+% year over year growth, and they expect that to continue. So that gives, I think, some good visibility for TSS. And again, you're right. I mean, having that kind of customer concentration is, always a risk factor. So I think investors, should pay attention to, prints about the CapEx spending in the AI space. And obviously, if there's any evidence that, the big companies are souring on it for, potentially its return on investment, then that would be certainly a red flag. But like I said, I'm just not seeing that right now, especially within the next 12 months.
Okay. Anyone who's watching the video might notice I have the TSS page up, the detailed estimate page, and you can see there's no Zacks rank or style score there, so we don't have an analyst on this one right now. I want to say maybe we did, but now we don't, or something, but looks like we don't have one.
Well, the microcap team has put out a report on it.
Okay.
Put out a report back in early September with an outperform rating, and it was about, the stock at that time was about 490. And, the rationale was, this is kind of, it's an AI data center play that on a sales multiple looked reasonably priced. And, we felt it had, the underpinnings there for, possible, parabolic growth. So, that's, So again, we were, Zacks was the first to put out an outperform rating on them. So
yeah,
we'll see now. Oh, by the way, they recently uplisted to NASDAQ. Sorry to interrupt you.
Okay.
So that should help too. I would assume though that should help potentially, with getting coverage, other Wall Street coverage.
For sure.
Yeah.
For sure. That's the other question that a lot of people always have with the small caps. First, how do you find them? Like
Right.
as an investor, not you per se, because that's what you do, but for the rest of us out on, just out in the world,
Right.
How do we find the small caps? And I always like to say, the Zacks rank can uncover them, but they have to have the analysts. Like INO Data has the one analyst now,
Right.
but it's got that Zacks #1 rank. So for those of us who do look at the Zacks #1 rank list quite often, sometimes you can uncover like, hey, what's this? I haven't heard of this company. And then, this is an AI play. And I even discovered Vertiv in 2023 based on the Zacks rank because it started to get the Zacks #1 rank. It's big cap, but I had not heard of the company prior to that. And it, was really flashing green just from the Zacks rank.
Right.
But what if you have a TSS that's not, we don't have the rank, maybe we don't have access to, your good research. Do we just kind of see it in other articles? I'm sure it's showing up in some of Zacks articles, even without the rank.
Yeah.
Is that where we go?
Exactly. Our team will put out a press release about announcing the launching of coverage on the stock, and there'll be links to to click on the research. And note, we're distinct from, I think a lot of other, research shops because we don't have the investment banking relationship, with these companies, which is a whole nother story, as we know, but I won't get into that. We're independent. We're making an independent assessment. We don't have any kind of monetary relationship based on that rating or anything, or we're not looking for future investment banking business, et cetera. So yeah, I would suggest.
Yeah, but it seems like really difficult to, uncover these small caps unless they catch on and become kind of, like a meme type thing something like that.
I tell you, my experience has been the perfect storm or the perfect scenario is you invest in one of these names now where you find the valuation to be reasonable. It doesn't have any coverage, and then the hope, like INO Data has started to morph into, is they start getting coverage from Wall Street, and that obviously just accelerates the trading volume, and more often than not, very positive things happen to the stock after that. So catching it before it starts getting attention from the kind of the bigger bracket shops out there is frankly kind of the name of the game, and where you're kind of really betting on your interpretation of asymmetric information, right? Because the rest of the world or the investment community is not focused on that, on those particular names. So,
right. I was thinking maybe we would cover a few other small cap stocks, like I said at the beginning of the episode, but now I kind of want to just leave it with the AI story for today, because this is the area everybody wants to know where there's some kind of small cap play. And there's great small cap plays in other areas too, but I might want to keep those for another day, another type of podcast that just covers, some of these medical device stocks and some of these maybe even small retailers, because some of them are kind of neglected too. But yeah, these two, very interesting. Are there any other AI names that are kind of floating out there? You didn't tell me that there was, but I feel like I should ask.
No,
they're secret.
No,
they're
at this point, no. But I do think, it's what's worthy of discussion is kind of what we're hearing out there about this AI craze, so to speak. We've heard that some companies are being somewhat tentative to adopt it. We're hearing that they kind of obviously are being cautious, and they want to make sure that that there is going to be a good return on that investment. But we also seen some shops like Google. I recall them reporting that I was surprised at the amount of coding that they're doing through AI now. So I think that's a pretty credible testament to its viability. Obviously, on the language model side, I mean, I've personally worked with ChatGPT. I think it's very good in doing certain things like synthesizing and summarizing. There's no question in my mind that there's some productivity enhancements to be made there, and I think we're seeing that, especially on the marketing side with companies utilizing it. So you often talk about your the .com experience that you lived through, and I think that's worthy to compare to, because I think it is different for those reasons that we're seeing. At least I personally am seeing some tangible productivity gains from it, and I can see its utility versus, the .com boom, which was like everyone's got a website, everybody's selling something online. Is that really sustainable, or is that overhyped or not? So, and we haven't even, and we're just talking about the language models at this point. We don't even know really what it can do, on the science side in terms of drug discovery. I mean, that might be ginormous. I'm just talking about on the language side. I definitely see benefits. So I don't know what your opinion on that is in terms of figuring out if, what's hype and what's not.
Right. I think we're still in the really early stages, and we have a couple more years to determine where it's going to be the most useful and how people are going to use it in all the capacities. And some areas it'll be, very revolutionary. In others, it might not be. And we did find that out with the internet too. I mean, there was, Webvan, and it failed, but then now many people are getting their groceries delivered today. It was just a little too early. Things weren't working out right, and they failed, but they ultimately did not fail. So, I feel like we're still in the early innings here, and it is totally new, but there are going to be some winners, some losers, and things where it doesn't work out. I put up the chart, this is a month chart, 30-day chart of INO Data and TSS compared just with the VOO, which is the S&P 500. And you can see how volatile it has been in just the last month for both of these small caps. One, outperforming, the other one not. But you're just going to have a strong stomach, I think, with any small cap, and specifically the ones in this category.
Yes, that is the... we can, although the academic evidence, long term, I'm talking, the last, 80 plus years, speaks to the a possible size effect. I mean, we can kind of debate that, whether there's a size effect or not. But what we can settle on for sure is that the smaller cap stocks definitely sustain a lot more volatility when you're looking at special standard deviation. Especially, it's quite significantly more than the large cap brethren. So you do need to be prepared for that.
Yeah,
but that's where the fun is.
Okay. I know. All right. Well, this is an interesting podcast, even though we're only covering two stocks. So they're INO Data, ticker INOD, and TSS Inc., TSSI. You can find both of them on Zacks.com. Only INO Data has the Zacks rank right now, but that can always change. And it is a Zacks #1 rank with that one analyst who has been raising the estimates over there, because that's what the #1 rank usually indicates, that someone is bullish about what's going on with those earnings estimates. And right now, we do know the story is bullish in the AI category for now. But, people are waiting to see if it's going to slow and when it will slow, because it always will slow. But for right now, still full steam ahead. And so we're going to keep covering it here at Zacks and on the Market Edge podcast. If there's some more small caps that pop up that are publicly traded, I'll have Mark back on to talk about those. And I am going to have him back on, since I led with some of these other small caps we might talk about, but we didn't. But I'm going to put him on another show, because small caps could be interesting in 2025. So there's always going to be something to talk about. So be sure to subscribe. Get us here on YouTube. We are on Zacks.com/YouTube for our YouTube channel. I know many of you are subscribing over there. So thank you. Give us a thumbs up. Leave some comments. Let me know what you thought about this episode and what else you might want Mark to answer when I have him on again. And always get us on audio as well. We're on Apple, we're on Spotify, we're on Amazon Music, we're on SoundCloud. Just about anywhere you can get podcasts, you can find us. but get us somewhere. And I'll see you again next week with some more stocks.